A legendary value investor turned a textile mill into a financial engine that powers the world's most successful holding companies. He has a personal fortune in excess of $100 billion, according to Forbes, inspired legion of loyal fans who make a trek to Omaha for the opportunity to hear him speak at Berkshire's annual meeting. Yes, he is none other than Warren Edward Buffett. Welcome back to Good to Go Cheap channel. In this today's video, we're gonna see documentary on Warren Buffett. Buffett born to Howard and Leela Buffett on August 30, 1930 in Omaha. He was a second of three children and only boy. His father was a stockbroker and a fourth-term U.S. congressman. Making money was an early interest of Warren, who sold soft drinks and had a newspaper route. He started investing at the age of 11, and at the age 14 he invested earnings to 40 acres of land which he rented for profits. His father urging him to apply for the University of Pennsylvania and accepted at age of 16. He left the university after 2 years and transferred to the University of Nebraska. Upon graduation, his father convinced him the value of education and encouraging him to pursue a graduation degree on Harvard. Harvard rejected his application. Columbia University accepted, and Benjamin Graham was the father of value investing, who was also a lecturer at Columbia University. After graduation, he asked Graham for a job, but he rejected, and then he started working in his father's brokerage firm and married a girl called Susan Thompson at 1952. After 3 years, Graham changed his mind and offered Buffett a job in New York. Once in New York, Buffett had a chance to build an investing theory, and he learned from the Graham value investing and buying undervalued stocks. At 1956, Buffett returned and started Buffett Associates and later purchased a house for his office. In 1916, he was 30 years old and already a millionaire, joined force with Charlie Munger, whom he first met in 1959. A collaboration resulted in value investing to something more than that, buying a dying business. Yeah, you hear it right. Buying a dying business. Along the way, the pair purchased a Berkshire Hathaway, a dying textile mill, and after some time at 1948, Buffett shut down it and eventually growing Berkshire Hathaway into a multi-dollar holding company. The question over it is how a man made a multi-dollar holding company from a dying textile business. Buffett first bought shares in Berkshire Hathaway in 1962, the struggling textile firm. Entrance by stock cost low price. Purchased a controller interest in 1965. Stock share traded at 18 when Buffett bought shares. It raised to the $20. In later 1960s, he became a CEO. Today, Berkshire Hathaway Class A stock traded at more than $550,000. Buffett used his textile company profits to buy other company, including life insurance firm. The useful thing about the life insurance companies Buffett found is float. The capital available after premium have been paid, but before the claim are paid, okay, Buffett used the free float to buy more other stocks and businesses. He brought See's Candies in 1972 and a purchase generated a more cash flow for investing. He also invested in American Express, Bank of America, Coca-Cola, and Apple, focusing on solid brands and business with a secure moat. For those who don't know what is moat is defined as a criteria at which a business sustained for more than 20 years, even with the strong competition. Today, Berkshire Hathaway owns more than 65 companies with a market cap of more than $791 billion. So, on the philanthropy side, Buffett at June 2006, he announced a donation of vast majority of his wealth to Bill and Melinda Gates Foundation, founded by Bill Gates and Melinda Gates of Microsoft, which focus on health concerns, US libraries, global schools, and it is one of the world's largest transparent charity. Buffett donation will come in form of Class B shares of Berkshire Hathaway, a 5 lakh shares value at $1.5 billion. Buffett also donated his fortune is his own Buffett Foundation, maintained by his three children, Susan and Howard and Peter. He became famous by saying after donation that I know what I want to do and it makes sense to get going. Once again, I know what I want to do and it makes sense to get going to those who judged him. When it comes to Warren Buffett investing strategy, he believed on well-managed and undervalued companies like Coca-Cola, American Express, Costco, all met his criteria and have remarked in the Berkshire Hathaway portfolio for many years. Buffett doesn't believe in the tech companies because it can be destroyed in if a competitor made a better software or a chip. But the distribution, manufacturing, and marketing of Coca-Cola like brands take years of time to make profits. He also invested in Geico, See's Candies, and Pampered Chips and Dairy Queens. Buffett was criticized by Wall Street experts for not entering the tech industries. In the dot-com bubble crashes, many experts was bankrupt, but Warren Buffett profits doubled. When it comes to Warren Buffett personal life, Warren Buffett is legendarily frugal and live a simple lifestyle. And he still lives in a 5 bedroom house which brought in 1958 for $31,000 and drink Coca-Cola and drives at local restaurant for a burger and sit in the preferred table. And Buffett and Susan married in 1958 and then separated in 1977 but remained married until her death in 2006. His children Susie, Peter, and Howard. Susan introduced her husband into his friend Astrid, a waitress. Buffett and Astrid began living together in 1978 and married in August 2006. Warren Buffett made fortune was caused by high research and timely purchase of undervalued stock and companies and hold it for long term. For most of the companies he bought, allow existing management to remain in this place and he still owned Coca-Cola and American Express. One of the most famous Warren Buffett advice was, if you aren't willing to hold a stock for 10 years, don't even think about holding it for 10 minutes. Once again, if you aren't willing to hold a stock for 10 years, don't even think about holding it for 10 minutes. So we arrive at the bottom line of this documentary, the lesson we learned. Be frugal and donate as you can and be follow the law of minimalism. And value investing is far better than speculation and the power of compounding. Invest your time and money wisely and then it will provide you dividends in near future. Thank you.